What if I told you that crypto just crossed the biggest barrier in finance, the US Federal Reserve System? For the first time in history, a crypto firm has reportedly gained access to the Federal Reserve's core payment infrastructure. That means crypto could now interact directly with the same financial rails used by major banks like JP Morgan and Citi. If this move expands, it could fundamentally reshape banking, payments, and the future of cryptocurrency. But here's the real question. Is this the beginning of crypto becoming part of the traditional financial system, or the start of stricter control over the industry? Let's break it down. According to reports, Kraken's banking unit has gained access to the Federal Reserve's payment system. This is significant because the Fed's payment network is the backbone of the U.S. financial system. It includes systems like FedWire, used for large bank transfers, ACH, used for everyday payments. FedNow, the U.S. instant payment system, launched in 2023. Traditionally, only regulated banks could access these systems directly. Crypto companies had to rely on intermediary banks to move money between crypto and traditional finance. But if a crypto firm gains direct access to these rails, that changes everything. It means crypto companies could potentially settle transactions faster, reduce banking friction, and operate more like traditional financial institutions. In simple terms, crypto may finally be entering the core of the banking system. To understand why this matters, we need to look at the biggest problem crypto companies have faced for years: banking access. After several crypto-friendly banks collapsed in 2023, including Silvergate and Signature Bank, many crypto companies suddenly lost their banking partners. This triggered what many in the industry called Operation Choke Point 2.0, where crypto firms struggled to maintain relationships with traditional banks. Without bank access, crypto exchanges faced major issues: delayed withdrawals, unstable fiat on-ramps, and liquidity bottlenecks. But if crypto companies can connect directly to Federal Reserve payment systems, they may no longer depend on commercial banks as intermediaries. That could dramatically improve crypto liquidity, transaction speed, institutional adoption. And that leads to the next big implication. Large financial institutions care about one thing above all else: infrastructure stability. For years, many institutions hesitated to enter crypto markets because the system relied heavily on unregulated intermediaries and fragile banking partners. But direct integration with Federal Reserve systems changes the perception of risk. It signals that crypto infrastructure may be moving closer to the traditional financial system. This could encourage hedge funds, asset managers, pension funds, and even banks to increase exposure to digital assets. We already saw the first wave of institutional adoption with Bitcoin ETFs in 2024 and 2025, but integration with Federal Reserve infrastructure could potentially unlock the next wave of institutional capital, and that could have a major impact on the crypto market. However, this development isn't universally bullish. There's a controversial side to this story. If crypto firms operate directly within the Federal Reserve system, they will likely face much stricter regulatory oversight. That could include stronger KYC requirements, transaction monitoring, reporting obligations, potential government oversight of crypto flows. Some critics argue that deeper integration with the banking system could reduce crypto's original goal of financial independence. In other words, crypto might gain legitimacy, but it could also lose some of its decentralized spirit, and that debate is only beginning. This move could also trigger ripple effects across the global financial system. If crypto firms gain direct access to the U.S. Federal Reserve infrastructure, other countries may follow. We could see Europe integrating crypto with central bank payment systems, Asia accelerating digital asset regulation, governments competing to attract crypto companies. And this competition could ultimately shape who controls the future of digital finance. Because make no mistake, the global financial system is entering a new era where crypto and traditional banking are beginning to merge. So what does this all mean? For the first time, a crypto firm entering the Federal Reserve payment system suggests that the walls between crypto and traditional finance are starting to collapse. This could lead to faster adoption, deeper institutional involvement, and potentially a massive shift in how money moves around the world. But it also raises an important question. Will crypto change the banking system, or will the banking system change crypto? Only time will tell. And remember, this video is for informational purposes only and not financial advice. If you enjoyed this breakdown of the future of finance, subscribe to Finance Buzz with Harold for more analysis on the biggest shifts happening in global markets. Thanks for watching.